And welcome out to our halftime report here, 10/11/2018, the day after, Matt. We're trying to recover.
The day after, the day
Yeah.
after tomorrow. I think that was wasn't that a movie on some,
Listen, you youngsters, it was a 1980s movie that came out, scared the shit out of the entire country. Ronald Reagan actually said that movie got him to rethink about his own nuclear policy. So,
well, I was actually referring to the day after tomorrow, meaning the movie that came out 10 years ago, you old man here.
The one about global warming?
Yes, thank you very much.
Oh, that piece of crap with Dennis Quaid that was a political, like, oh my gosh, we're bad.
There's a little bit of politics. Are you saying there's politics in Hollywood? That's a quick take that has not been happening lately. I like
original
that.
Right here.
Yeah,
listen, you guys better get going, or I'll take over this whole halftime show.
Did you literally just get off watching a bender on Sons of Anarchy? Did you just watch that?
It's cold.
Okay, I got it.
This is insulation for my big ears.
Guys, welcome out to the halftime report. Hashtag halftime crew. Welcome out. Glad to see everybody come in here. And for those watching on the replay, we got a special guest here in Tap Train's halftime report. Our older and wiser brother, Mark, here is to help us navigate today's price action and so on and so forth. But before we get into the halftime report, I just want to point out something Cody, our nice producer, did. He did a little mashup for the halftime report here. And excuse me, it's only about a 2-3 minute video here, but I just felt like it was really good. And so for those of you who haven't seen this yet, we just put it up there yesterday. It replaced our little marketing testimonial video we had on our whatnot. But I love this video, so definitely go check it out. It's a really, really, really creative video Cody did. So well done, Cody, and hopefully you guys enjoyed that 3-minute mashup of the halftime report. Tim, take it away. You're the host here.
Yeah, for sure. You know, by the way, that video, it makes me feel very aloha with that shirt on. Good pull on that image there, Cody. I like that you found my Hawaiian shirt day that I wore in our halftime report. Square was on my mind. We'll get into stocks a little bit later, Matt. Let's start with the S&P 500. Markets sold off aggressively after our show yesterday to close the day. We were online. We were talking about it. You know, I've gotten a lot of experience doing all this stuff. And I got to tell you, that was very impressive sell-off. You know, bears won the day by a long shot. Here we are sitting on the 200 period simple moving average, and the market's fighting, you know, and it has not picked a direction yet. That is the epitome of a spinning candle where you don't have higher high and you don't have a higher or a lower low. You have almost a doji type candle. Matt, how do you read the action?
You know, Tim, I said after the market sell-off yesterday, when the market was closed, and I said on Twitter, I said, it's going to be a battle. It's going to be a battle tomorrow. And that's what you're seeing. You're seeing a battle happening for position on this 200-day moving average with the S&P, with the NASDAQ, as well as with the YM. I mean, YM came all the way down to the 200-day as well. So it's going to be a battle, and it's going to be a battle for the next few days, Tim. I don't think it's appropriate to really be aggressive here. I think it's appropriate to be very conservative and very cautious while we watch the hedge funds out there getting their, you know, proverbial behinds getting kicked right now. A lot of hedge funds getting absolutely destroyed. So I think it's important to be cautious, conservative with our timing and our strategy selection. But at the same time, we don't want to move away from the market. We never want to move away from the market because these can represent tremendous opportunities. And I want to talk about a couple of things before we bring in Mark and you to kind of look at it. In looking at Gino's AR high, AR low, I've been hearing that it reminds a lot of people of what happened in February. And you know, I even see some similarities to what happened in February and March of earlier this year too. But if you look at the AR high, AR low, this is what was happening in February. You only had a couple ticks down where you had, you know, most of the stocks setting lows versus highs. Look at this here, Tim. That is a much deeper and much broader sell-off in the entire world index. Unlike what we were seeing here in February, you're seeing a much broader sell-off across every sector, across every industry, across every world index out there. And when you're just looking at that, it really reminds me back in early 2016, Tim, when you saw this sell-off in early 16, and we all remember the 10% correction that happened in January of 16, and the market did recover off that. Another thing to keep in mind here, guys, is, and this is, I don't want to say it's frustrating to me, but it's very curious to me that everybody in the market always like, oh, I want to see a 5 to 10% pullback and then I'll buy, right? Well, guys, this is your 5 to 10% pullback, and let's see what you do here. When we saw these happen last time, I mean, it kissed, it recovered, it kissed, it recovered. Every time in the last couple of years that we've seen this type of situation happen, it has recovered from those sell-offs, unless you go back to the 16 where it actually broke those 200-day moving averages. But over the last couple of years, it's been very consistent, bouncing aggressively off that. That is something to keep in mind. I don't think it's today, Tim, because again, I don't think we should be fighting that battle aggressively. But there's going to be opportunities here over the next week or 2 weeks. And I think it's very important to stay in tune with the market. You cannot let one day stop your game plan. Okay. If yesterday hurt anybody to the point where you were losing 20, 30% of your account, you're making some really big mistakes by being overtly leveraged and overtly aggressive when the market was not determining that. And another thing, Tim, we were sitting here in the halftime report yesterday, and we were sitting there staring at the NASDAQ, right? I mean, we were just sitting there staring at the NASDAQ, and we were still staring at that 72 handle right here. Okay, that was before the bloodbath really began. We're down 170 points in the NASDAQ, 2%. And Tim, we're sitting there saying, okay, if it breaks, it will go down a lot more. That's because, and this is something I want to get both of your take on. Every time we've seen this happen over the last week, over the last month, over the last year, over the last 2 years, there has been a buy the dip mentality. Right. And what we mean by that buy the dip is when you see this price action come here and it slows down, everybody has been trained over the last couple of years by that dip because the price will appreciate off that dip. But once that broke, Tim, there were no buyers. I sat there and I was day trading the Russell 2000 yesterday after the NASDAQ broke the 7,200 level. I was day trading the Russell, Tim, and I remember talking to you about 1:45 our time before the market was closing 15 minutes. Obviously, that's 2 o'clock Mountain, 4 o'clock Eastern. And I said, Tim, I've been looking at this tick chart for 2 hours. I don't see any buyers. I don't see any buyers.
No, the market literally just went parabolic down there the last hour or so. And then it spun into some risk overnight, which, leads you to believe that maybe we're going to come in and carry through. Whenever you go back and look at major market sell-offs, whether you call them a crash or correction or whatever it is you want to label it, you tend to see long lower tails, Matt. And that's that volatility as all of this money is shuffling hands. I saw an interesting line online that some of the large cap tech stocks lost like $200 billion worth of market cap, the FANG stocks, just in the one day. I find it fascinating what's going on here in the market today. It's trying to recover. And I want you to go back to the daily chart on the S&P because I want to get...
Can I tell you another silly line I saw yesterday?
Yeah.
Bezos lost $9 billion yesterday. We should all let's all shed a tear for old Bezos only having $151 billion.
I don't feel bad for Jeff Bezos. No, I do not.
But I want to drop some wisdom here. All right. Tune in on that intraday support area, because I think there's a great lesson here, because people were trying to figure out what happened. No, not the one that formed, the one that formed yesterday before the big drop. All right. So you had a really nice intraday support. And this is how I trade, because I'm a very short-term trader. So that is a really, really strong intraday support level. All right. But markets trending down, the intraday moving averages pushing down. Look how it just, that 20 acted as resistance. So you have downward pressure in moving average. You have downward momentum. You have an intraday support level that breaks. All right. This is a very common occurrence. Intraday support, intraday resistance levels break all the time. They're their weakest form of support. Now, what I like to do is I like to, so I trade off smaller time frames, like we're looking at a 15-minute chart here. But then I like to go to longer time frames to see where's the next area is going to catch a support. So let's go to a daily chart. And so when that intraday support level, hone in on the last 2 weeks of price action, when that big red candle, when that intraday support broke at 7,200, there wasn't another support area on a bigger time frame to help prop it up. So this is something that always can create some really big price action, is that when you have an intraday level break like you did yesterday, and there's nothing to help prop it up anywhere, well, these type of situations can occur. You know, you had really dramatic price movement upward over the last 3 months. Getting a little fall, there were no support levels. There were no support levels.
And I mean, there were so many takes out there on Twitter. Twitter drove me crazy yesterday, mind you. I mean,
because nobody can read a chart.
No, it's these people that have never seen a bear market, have just been buyers for the last year or 2 years, and they think they're experts out there, and they're just running for the hills, screaming bloody murder. And I can't believe anybody actually listens to that type of nonsense.
I mean, the one thing about technicals in this year has taught everyone is that when you get into these no man land support areas, computers, which are increased, everyone acknowledges that computers have a bigger role than ever before in dictating price action, right?
Absolutely.
When you get in these situations where the computer is reading its algorithms and there are no support areas, what are computers doing? They're selling.
Listen, and that's one of the reasons why you see the speed of these drops, right? Is because they're
100%.
Unlike 20 years ago, where it was people processing the data and making calls or clicking buttons. Now you have these high frequency trading systems that literally will process more trades in a fraction of a second than we could ever even think about over a lifetime of trades. And this might seem like a scary concept for new traders, but it's really, really not. You have to program those computers, right? You have to program them.
If you are a trader, look at the price action the last 2 years, from 2017 to 2018, and put yourself in the mind of a computer. You will retire rich if you can understand that these moves ups are really consistent, really steady, because computers are helping control the price action. But every once in a while, as we've seen this year, you're going to get caught in areas where there aren't support areas. And then computers they go crazy and they set the price down.
That's also one of my concerns about the next bear market, Mark. Whether or not this is the beginning of that, we don't know yet. Typical bear markets happen with the reversal on the weekly chart, very similar to what we saw in 2007, very similar to what we saw in 2000, and which means typically those markets will come right back up into those all-time highs before they ultimately reverse. But one of my biggest concerns over the last few years is algorithms have started to take in a more important role in the financial markets. Is once those algorithms all turn down, what do you see? And what do you see is a day like yesterday. That's what you see when those algorithms all turn down. We've seen it before in many markets. We're seeing it before in individual stocks. I read a report last year, and I can't remember. I wish I could give credit. I can't remember who put the report out there, but they analyzed 5 to 10 stocks on a daily basis, flash crashing. Literally 5 to 10 stocks every single day.
That's the thing. Is this stuff happens all the time somewhere.
Yeah.
I mean, we see it on the market and it catches the headlines and Trump gets out there and blames the Fed and all that. And I'm sure we're going to get into that.
Yeah, I have a couple thoughts on that.
Everywhere on a stock or a market. This is really common. It just doesn't get the headlines and active trade. If you're not an active trader, you don't see this all the time.
Mm-hmm. And if you're not an active trader and then you see something like this and you see the headlines, it sparks some fear. I mean, think about those 401kers for a second, guys. They couldn't do anything yesterday, right? They get home from work yesterday and they're reading headlines on Fox News, CNBC, Reuters, Bloomberg, CNN, and it's literally bloodbath. That's all you saw in the headlines yesterday. They're going to come in today and be like, oh my God, look at my 401k for the first time in the last 3 years. And they're like, ooh, I am down 10% in my 401k in the last week. What's going on? What's that going to do over time? That's going to trigger them pulling money out of those or going to cash positions. This does have a prolonged impact. But we will be here every day to help you analyze that, obviously. But from a short-term perspective, guys, I want to get your take here. Whatever the reason was, the buy the dip mentality kind of got crushed yesterday. A technical break of 7,200 in the NASDAQ, growth stocks that have been, high flyers for years and years, overweight, the money coming out of it, trade war, CPI report, interest rates. We could throw a lot of reasons at what happened yesterday. But the reality is this, guys, whatever the reason is, the question is, what do we do now? That's the question here. And I want to get Tim, you and Mark takes on that. With the S&P 500 at the 200-day moving average, with the NASDAQ at the 200-day moving average, with the Dow Jones at the 200-day moving average, kissed off it today and responded very aggressively to the buy side after it kissed off that 200-day moving average. With those major indexes all sitting at the 200-day moving average, guys, what's your plan of attack coming in over the next week? I know, Mark, let's start with Mark. I know you're a very short-term trader, so I want to get your take.
Put up a weekly chart, because whenever I'm making a big decision, I actually, even though I am a day trader, short-term swing trader, I always try to get the longer perspective. And so that blue line represents the 50 weekly moving average. Mm-hmm. All right. This is my gauge right now for market strength. We haven't been below the 50 weekly essentially for 2 years, man, like 22 months or so.
It was the sell-off early 16.
Yes, but essentially 2 years. We see how it responded and has been a really good gauge, a really good gauge this year, even in the midst of all kinds of fear about trade wars. And ironically, this stuff that's happening right now, this is all the fruits of that first February on the unemployment report, where the wage growth numbers were high, because this storyline is not something that caught us off guard. Inflation, the Fed raising rates, this has been a storyline all year long.
It's been all year long. Interest rates have been a storyline for 2 years. Inflation's been a story now for 2 years. Trade wars have been a story for 8 months. Nothing happened yesterday that we did not already know about.
So my short-term plan of attack as a short-term trader, this is my bias. I am betting that the longer moving averages, the 200-day and the 50 weekly hold. I'm betting that hold. Now go to a 15-minute chart.
I love it. Mark goes from weeklies to 15-minute. I love it.
Yeah.
But now, all right, so I'm betting it holds. And now my confirmation on its hold are going to be short-term signals. We see that a support area. For example, what we're looking at the Dow right now. Look at that support level that has formed over the last day, right? I'm keeping a strict eye because there is a direct correlation. The charts line up really nicely right now. Your 200-day moving average, your 50 weekly moving average are lined up really nicely with this short-term support level.
Well,
if
Mark,
that short-term support level breaks, the major moving averages are breaking as well.
Well, look at this. Okay, it's hard to see because I drew it on my intraday chart, but that little dash here, that red dash there, that's that intraday support level right there. Okay, you break that down into that 15-minute chart, and you can look at the exact same techniques today that we were looking at yesterday regarding the break of 7,200 in the NASDAQ. If you break 25,200 in the YM, the Dow Jones, you're going to see quick appreciation back down to the downside. Same thing can be said on the upside as well. I love the analysis, Tim, based on short-term versus long-term with Mark. But what's your read on this?
Well, to me, some of it is weekly timing. It's Thursday, midday. We've got from now till the end of the day to see what the market's going to do. Right now, I'm completely balanced, hedged, and not taking a lot of new positions. So it's an unwind and protect type of day until I see more confirmation. I love the analysis Mark had about getting confirmation on the intraday or the daily or whatever it is. I don't know if there's anything that could happen by tomorrow that would make me want to go long Delta. Now, that might just be because of, the rapid nature of what that sell-off was yesterday. I know we've got Trump and Z are going to be meeting and talking, and they might get resolution to this, that, the other thing. But there was something different about the sentiment and the emotion of how that market sold off yesterday, because it just completely collapsed, and I'm seeing some obvious volume and pressure like everybody else in the market seeing. Matt, we closed down 4.5%. But not just that, some of the big names, Amazon, Apple, Google, Facebook, Netflix was down 10% at one point yesterday.
Okay, but outside of Apple, every one of those stocks had already reversed him. Even Amazon had reversed its trend. So Apple and Microsoft were really the only two stocks that you just listed that were bullish coming into yesterday. And that's another thing. I see all these things about, oh man, there was nothing, I couldn't meet anything, couldn't see anything. I'm like, Google was reversed a month and a half ago. Yeah. It had formed a kiss of death 3 weeks ago, right? Yeah, Amazon double top, double bottom 2 weeks ago. Okay. Yeah. Netflix got destroyed off its earnings report last time. Same thing with Facebook. So what are we doing here? Those stocks were already reversing.
Mm-hmm. I love three justices trying to get a word in edgewise with one another. That's always a challenge. Two comments here. One, my brothers have pompous, pretentious backgrounds, books and pretty things. I have green tea fat burner. Now, if you want to be a sponsor for the item I show on my back theme, contact Tackle Trading or whatever the hell we're doing on this, and you can be the sponsor of Mark Justice's. Today, it's green tea fat burner. Makes you lose calories.
From the bunker here, we're talking about a market crash, and I got to tell you, we got to have a short break for one of the key products, green tea fat burner. Green tea fat burner. Put it in your eyes, crush it up into a powder.
I feel like I'm gonna have to add a disclaimer to this now.
Yeah, Cody might have a great opportunity for new traders to answer a big question.
Oh wow.
Disclaimer
do you want to be macro analyze and try to figure out everything, or do you just want to read the chart? Reading the chart makes life so much easier. We could sit here and analyze all day. Well, what does historically, what do interest rates mean in a uptrending market when they start to rise, and look at, or you could simply learn to identify support, resistance, and base your trading signals on that.
Right. And the Dow is sitting on key support. So is the S&P. The storylines, Mark, for a couple of years, and especially this year, has been that the U.S. markets like large cap S&P and Dow have been leading the way. We have relative weakness in some of the small cap areas. Pick up RTY here, Matt. When the small caps are breaking down, and you do get mixed signals because this is below the 200. It broke the 200. It's selling aggressively. Mark, I want to get your read on this. I mean, when one index has broken the key support level on the chart, but the other ones have not, what do you do with that mixed information?
Well, I don't treat the small caps as the small caps are different. I mean, the Qs, SPY, the Dow, I mean, these things have rough correlation. Yeah, like one will be doing relatively better. Like earlier this year, we saw the Dow doing a little bit worse because of the large cap components involved in the trade war. And sometimes tech will take off a little bit more. I treat the small caps kind of like a separate ETF, like I would treat aerospace, like I would treat a specific industry or a specific sector. They benefited, the small caps benefited a lot when you had the trade war, because it was seen as a insulation. Small cap companies are insulated from the larger trade war. And so they got a little bit of a bump from that. But I trade it just like that. I mean, that's a huge break. Not only is that a break of the 200, that's a break of a really, really strong previous resistant horizontal area. I mean, that's a double break. That's a really big break.
It's a huge breakdown, huge sell-off, and small caps have been signaling weakness. Matt, this might be an area where, I know that some traders are going to look at the small caps as an indicator for the other markets. Do you think that the small caps are leading the way to the other markets, showing us they're going to break eventually?
I agree with Mark that the small caps should be treated like a sector more than an index. I do agree with that. I think Mark would agree with this as well, that small caps do have a tendency to be an indicator for the broader market because they are quicker to move to economic data versus some of the large caps are.
All right.
So, but
let me share something with you that I spent like 4 months of my life doing. I literally spent 4 months of my life doing a study on moving averages. Hone in on the price action of the small caps over the last 5 or 6 days. All right. So I did a study on moving averages, tens of thousands of data points. So a very expensive study. the first test of a major moving average, it usually holds. But each subsequent test of that moving average, the moving average becomes weaker and weaker and weaker. Think of it as you're pounding on a glass slowly, or I've never came up with the right analogy. When there's
it's Mike Tyson. You're getting hit by Mike Tyson.
You're getting hit by Mike. There's a great. There you go. And so you're getting hit, and eventually it gives out. Now, so we see that over the last few days, not only were you setting lower highs over the past 3 days, but that major moving average was getting pounded once, twice, 3 times. So from my perspective of the study, like you had huge warning signals coming into yesterday. Lower highs, pounding, that major area of support, which was also a huge horizontal area of support as well. Broke 3. Now go to the NASDAQ.
Well, real quick on the Russell, let me add one point to that. We went bearish in the Russell 3 weeks ago.
Yeah.
When it broke 1700. That's when we went bearish. We literally said it here in the halftime report. We went bearish. It was bearish well before any of the other major markets started breaking that support level. And you're absolutely right, Mark. When support gets hit over and over and over and over again, it's like a fighter getting hit by Money Mayweather over and over and over and over again. Eventually that will fail. Eventually that will go down. That typically what happens. And I love your data. And guys, you got to realize something. Mark is one of the smartest data-driven analyticals I know. And when he says he looked at tens of thousands of data points over 4 months, he wasn't just saying like most people, hey, I looked at this, I looked at it. He literally lived his life around this for four straight months. He is an expert at moving averages. He's an expert.
You know why I did it? Green tea fat burner gave me the energy I needed.
I don't know why Tackle Train's not getting paid by Green Tea Fat Burner. That's what I want to know. But there obviously were signs there. Okay. But again, what do we do now? Okay. What do we do now? I think is the most important question. And for me, cautious, conservative on strategy selection, stop loss technique, targeting technique, and maybe even just, if you're new to the market, taking a step back, letting the volatility subside.
Not just that, Matt. I think that you have to execute your trade plans no matter what. The last thing in the world you want to do is ignore what you had planned before you came into this risk. So and sometimes you got to, put your big boy pants on and take the green tea fat burner pills and swallow one. The reality is if your credit spreads moved in the money and your rule is to get out, then you got to take the lump on the head.
Take the loss.
Period. And it's a hard thing to do. It is a really hard thing to do emotionally.
Let's talk about what you and I were talking about with the Russell 2000. We were talking yesterday, and Tim and I do this every day, guys. We talk every day before the market closes about what he's looking at versus what I'm looking at. And Tim was getting beat up pretty hard on the Russell 2000 condor, correct? Mm-hmm. Like a lot of people were. And he's down a few $1,000s in the trade. He's like, you know what? I don't understand what's going on. And we're just kind of trying to understand, just like everybody else was, right? Yep. Why is the market doing this in response to everything else? So we were just doing the same thing everybody else was. But you and I were talking, and basically I said, Tim, well, what was the plan coming into it? If you take out today, right? If you take out the price movement today, what was the plan going into the trade? Tim didn't even say something. He didn't get out, but he hedged it. He was 30 points away from the strike price. If I remember, you were 30 points away. And he said, you know what? Another day like this, I turn a $3,000-$4,000 loss into a $10,000 loss, right? And so you basically went out there and bought out of the money put options at the strike price to hedge it. That's exactly what his game plan coming into it. So even if you take out the volatility of yesterday and say that happened over a 3-4 day time frame, you still have that same trade management technique.
There's no doubt about it. Hedging is a critical skill set. If you're going to trade credit spreads, or if you're ever going to put on more than one trade, there are simpler ways to trade, by the way. You don't have to be a theta trader or a credit spread trader, Matt. But if you don't know how to assess the potential risk in your position, you're probably not ready for prime time, Yeah. And there's a skill set that I quiz people on whenever I have a chance to talk to them one-on-one. I ask them, if the market drops 4%, how much does your portfolio lose? If they can't answer that question, they don't understand delta weighting or
Delta
hedging
weighting,
or any
theta
of that
weighting.
stuff.
Yeah.
Yeah.
And I just one last thing on the Russell here. It reminds me of an article Tyler wrote in Tales of a Technician in December of 16. Okay, Trump was just elected, and the market skyrocketed up like 12% in the next month, right? And every Russell Condor got blown out of the bear calls got blown out, and everybody's like, "Oh my goodness, we're taking a loss here." And Tyler says, "Quote: What I learned about the Trump election in regards to cash flow condors, nothing. I'm going to do it next month and next month and next month and next month, because these things don't have a tendency to continue to see 4-point down days in a row. These things have a tendency to slow down over time. You can't get it, because if you quit, you miss out on the next year of gains is what you do. You can never quit in the market. And if your portfolio gets beat up by 20% on one down day, Tim, you've made massive mistakes going into that.
Yeah, for sure.
Well, so much in trade. Okay, and first of all, trading, when we use that word, means different things to different people. Like the type of trader I am, I love this environment. I'm not a credit spread trader. I'm a directional trader. So this type of price movement, I love.
Oh, you're swimming all day long.
But it's a matter of faith. Like nobody likes to lose. Who likes to lose? Losing sucks.
Well,
but it's a matter of faith.
What percentage, Mark? What percentage of the population yesterday lost money in the stock market? 99?
A huge.
I did. I lost money yesterday in the market. I was net bullish coming into yesterday. I lost some money, but it's how you respond to that. Same thing with Tim. Tim, yeah. you were net positive delta, right? I had like a slightly bullish delta. Tim had like a positive 2 delta going into yesterday, but it's how he responds to that.
I mean, let's talk it philosophically, and let's just talk one trade, whatever it is, whether directional, an iron condor, or whatever that trade is. There were reasons you placed that trade. All right.
Yeah.
Some of the trades are going to win, some are going to lose. As traders, we've learned to accept a long time ago that it's about probability, and you do a lot of trades over and over and over. It's going to work out. But there was a reason you placed that one trade. Now, if that trade goes wrong, do you place that same trade again? Now, if you don't, then you never had faith. You were either gambling or just hedging, jumping on the bandwagon to get some action.
Mark, you're a professional poker player.
People that have faith in their.
Let me ask you a question, Mark. You were a professional poker player for what, 10 years? 15 years?
Between sports betting and poker, I made my living gambling for about 12 or 13 years.
12 or 13 years. And guys, when I say he was a professional, I mean he was one of the best out there. This is before.
I made a living. I don't know what my skill set is.
But again, Mark,
nice lifestyle off my.
It was also before Rounders made the World Series of Poker vastly popular, and I mean you were a grinder, like, okay.
Yeah, I was a grinder. That's a better way to describe it. Yeah, I was a grinder.
You were a grinder. But Mark, let's say you're playing a hand of poker and you have ace king suited in hold'em, right? And it comes, ace queen 10, right? You most likely have the best hand there. You have a high probability of success. Agreed?
Sure.
But there are draws that can beat you, correct?
Oh, absolutely.
Okay. So river comes.
You rarely have the nuts in poker. Yeah.
Okay, so turn comes, a 3, doesn't hurt, doesn't help, nothing. River comes jack. You have a lot of hands that can beat you. Okay.
Well, technically you have a straight, so you have the best hand.
Okay, but you get my point though. See, that's why I was not a professional poker player. Mark was, but you get my hand. You have bad beats. That doesn't mean you don't play the next hand though, Mark.
Yeah, of course. No, and that's the thing. And you play enough poker hands, you play that hand roughly the same way every time. And this is why the stock market's so much better than poker, is that I would have to take into account the humans I were playing against at any given time. And so there were some variables. Now a stock chart is a stock chart is a stock chart. If you put poker into the stock chart analogy, I would play ace king the same every single time. I am pay zero attention to the storylines.
As a trader then, we have ample evidence that when the market comes down to the 200-day moving average in the last 10 years, that most of the time the market responds bullish. You got to play that hand, right?
Yeah, and here's what's beautiful is you play the hand, but then you have it, if it breaks, you get to mitigate your losses. Let's say it comes down to the 200-day in the next, well, as of today. I've actually been out of the market pretty much for the last few weeks waiting for an opportunity. There's a ton of stocks I'm now interested in. But let's say I'm wrong. Do you think I'm going to like take those losses all the way down? Of course not. I'm going to take small relative losses. You know, and so my risk, if it rebounds here and then goes up, is much higher because let's say the 200 gives out or whatever the particular stock is give out. And I'm wrong. Let's say I'm dead wrong. Let's say, Mark, you're an idiot, blah, 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 and you're dead wrong. My losses are going to be small. You don't have to be bright to make money in the stock market if you keep your losses small and your wins big.
Yeah.
I love picking things up as support. It's cheap risk, guys. I mean, that's what it is.
If you bet on support holding time and time and time again, and then when it gives out, keep that loss small, you are going to be so filthy rich in 20 years. Bet on support.
But and not if you only play that poker hand one time. Because when you all you do is one thing one time, you have no probability. It's random success. Probability wins out over time, not every time. And yesterday support gave, and you saw what happened. But as you've seen over the years and years and years and years, support typically holds. And Tim, what do markets typically do? They appreciate typically.
Most often the market goes up. I mean, that's why we've been in a bull market for 10 years and the 200 period moving average will hold more often than not. I mean, we know these things, right? And it's about appropriately position sizing and controlling and hedging off that risk so that you can keep losses small. Matt, you've said this many, many times, and I think Mark has said it many times as well. There's only 3 outcomes you should have in a trade: small loss, small gain, big gain, you know. That's it. And if you can keep your results down to those kind of things, then you're going to be a much, much better trader.
And anytime and the number one flaw in traders who miss that rule, small gain, small loss, big gain, right, is over leverage. That is the number one reason why people take a big loss is they over leverage in the options market and they put more than 2 to 4% in a trade. And it's not just that though, Tim.
And that's just a fancy way of saying y'all are getting too greedy. That's all that is.
It is. There's no doubt about that. No doubt. But it's not just the leverage in one trade, Tim. If your portfolio design is based around, I have $100,000 and 70% of my account is in, bullish swing trades using call options, you are over leveraging your entire portfolio is what you're doing. There are very important concepts in strategy selection, position size, risk rules, asset allocation. There's very important rules, and you got to go through that process in identifying what your system is, what your rules are, what your position size is, what your asset allocation per system is. And it can't just be on leverage. Every portfolio, I don't even care if it's a small portfolio, should have stock in it.
Hey, Matt, go to the price action 15-minute chart again. Let's talk about also a very simple thing. Look at that intraday support, look, the support yesterday. Let's highlight that. All right. You can go bearish, people. Like where we're talking from a bullish perspective, because most people are bullish. Most people have 401ks or have a bullish tilt. When you have support areas give out, you can minimize bullish losses. But you can also make money going bearish. That's what the computers did yesterday.
When it broke 7,200, when I was day trading calling Tim, I wasn't buying the index.
No.
I was shorting.
No, and as a matter of fact, even here, Matt, I'm looking at all the different indexes. The YM has clear support. That breaks support. You've got the potential for another sell-off here. It may or may not be what we saw yesterday. Obviously, we're not down anywhere near that. But the ES has major support here, very clearly identified.
You got to give them numbers. 2750. Okay, that's your intraday.
Let's talk from a practical standpoint moving forward. Let's say, all right, this intraday support area that we've been talking about. that's forming at the 200, at the 50 weekly. Let's talk about some specific triggers to get into a bearish trade or to get out of a bullish trade. Like, what would your specific trigger be? One, you have to decide what time frame you use.
Well, yeah, that's the question. What technique, what strategy are we doing? Are we, I mean, are we swing trading here? Day trading would be anything under intraday support, right? If you're on the buy side. If you're swing trading here, for me, it'd be under the 200-day.
I got a very specific one. I'll throw this to you guys. Let's say that the most important decision you got to make today is whether to buy insurance for your 401k or your long-term portfolio. You're long the S&P 500, either in ETFs or mutual funds, some form or fashion, and you're watching these levels fight.
I get the question, but I kind of feel like you're trying to buy insurance after you get in a car wreck.
I get that, but you also have a tire that's blown, you're on the side of the road, and you're still not home safe, right? So you are sitting on the 200 MA. Insurance would be very expensive. You're right, Matt, because you just had a very big market disruption. Volatility's up. We would like to go back 2 or 3 days and buy insurance then, but you're looking
so
at it.
Tim, I'm your insurance agent. Let's explain how volatility works. Yeah. I'm your insurance agent. Mark, I'm your insurance agent. Mark, you have you have no history of anything bad. You drive the limit, you don't have any wrecks. And Mark comes to me and says, "Hey, Matt, do you want insurance?" I say, "Yeah, you don't have to pay a very heavy premium because Mark has a history of not doing anything, right?" Mm-hmm. But Tim, let's say you call me when you're drunk and you just got in a wreck and you hit a telephone pole. Okay. And I'm like, wow, you're going to have to pay at least 20% premiums. Guys, if you buy insurance today, you are paying a massive premium. Massive premium.
I feel like if you sell car insurance to a drunk driver while they're drunk, you might have your insurance license pulled.
That's my point. That's my point. Okay. So you know, you don't buy insurance after volatility skyrockets.
I agree. 100%.
The party.
Yeah, but Tim's question is valid. Most people out there that would be listening to this, and most people in general, didn't protect their portfolio and are now in panic mode. So what do you tell them?
Well, I don't
honestly. I mean, I'm gonna give advice. Okay, honestly, this is what I tell them: you need education.
Yeah,
that's what you need. Everybody, I get so sick and tired of this quick take universe in America and in the world right now saying, hey, listen, just tell me what to do. Just tell me what to do. Just tell me what to do. No, go get a mentor. Go get a coach. Go get education. Spend more than goddamn 5 minutes of your life on your financial education. And you might actually have something.
Well, and I also ask them specific questions like how much do you lose if the market goes down 5%? If they can't answer it, I make them go find it. And if they can't do that, that might be an indicator that they don't have enough training, Matt. You know, there are very real things that you have to go and look at and start to assess the potential risk.
Honestly, if people call me up today and they ask me if they should buy insurance today, I would say you need to get out of the market.
Yeah.
Honestly, I would say go to a cash position and wait for volatility to subside. That's my recommendation.
Mm-hmm. Mm-hmm. There's a lot of levels here that you could do something on, whether or not you do buy insurance or not. What if somebody does know that they want to buy insurance, but they're waiting for a trigger? Is there some level here, Matt, that would show that breakdown on the S&P? Is it 2750 on the intraday, or is there a bigger level?
On the S&P, it's 2750 on the intraday. But for me, if you're a trader and you're looking at this with proper education, you know what you're doing. For me, buying insurance would equal this. Number one, you shouldn't be in mutual funds. If you're a long-term investor looking at insuring your portfolio, you're basically selling calls at this point to offset some of that premium. Mm-hmm. So if this were me and I'm looking at buying insurance on my portfolio, I'm looking at a close under the 200-day moving average, Tim. If I get a close under the 200-day moving average, at that point, I'd probably sell some calls to buy some puts to collar my account.
Yeah, we've got a bunch of charts to go through. I do want to start moving through some of those as well as we have this conversation. Go to the dollar and let's talk a little bit about the inflation. A lot of the headline risk right now is talking about how the Fed's raising interest rates. President Trump came out and said the Fed's out of their mind. They're crazy. It's their fault. Starts pointing the finger and pointing blame towards the Federal Reserve. Well, actually, President Trump, it wasn't your credit or your fault, probably. The president has very little to do with the stock market.
President Trump has zero credit for what's happening in the market, and he gets zero blame for what's happening in the market. This market for 10 years has been a Fed-driven market. The Fed, if you want to give them credit, give Bernanke and Yellen some credit for the pumping and the dumping that was happening in 09 to 15, and give Jay Powell some of the blame for raising interest. But to me, and I'm just going to say this because I'm looking at potentially going long on the dollar over the next couple of days, and we'll look into that. But to me, it is absolutely insane for us to lower interest rates right now. Inflation is over the 2% target. Year over year, we're approaching 2.7%. It's outpacing wage gains in America today. And so Mark likes to do his technical analysis, and he's an expert on it. But I do understand the economic condition, and the simple truth is, if the Fed does not raise interest rates, they are risking hyperinflation in the U.S. based on the amount of money we have pumped into the system over the last 10 years. They would also go against their mandate, their dual mandate they've had since 1913 in maximizing employment. They have done that. The Fed has, not the president, not President Obama, not President Trump. The Fed maximized employment through going to zero interest rates for 7 consecutive years, Tim. That's what maximized.
What's hilarious is people that are complaining.
One thing. And when you maximize employment, the Fed has a mandate to get out of the economy and let the economy run for itself. And raising interest rates to 3%, that is something the Fed has to do based on their mandate.
This is Econ 101. I mean, this is really simple stuff. I mean, the Fed has no choice. It's just what rate do they do, blah, blah. You know what? I mean, people are so like, oh my gosh, the market went down yesterday. Yeah. Have inflation get out of control and try to get that genie back in the bottle. I might be a technician, but I'm also a history nerd. Try to get runaway inflation back in the bottle. There will not be easy solutions to that.
Yeah, enjoy the 1970s, guys. That's what we're
and hyperinflation and then really, really high interest rates will then depress the economy.
Listen,
I mean, the Fed's doing
I don't care if you're a Trump supporter or a never Trumper or a liberal. It does not matter to me. It is absolutely dangerous to an economic system to keep interest rates as low as they did for as long as they did. They have to raise interest rates.
Well, you know how many times in history a country has kept interest rates this low? That would be never. This is a unproven. We're in an experiment right now of what happens after having interest rates that low. It could be argued that the Fed, when we're looking at this 10, 15, 20 years from now, and we're like, oh my God, can you believe what happened? That was a disaster. It can be argued that this shit should have started 5 years ago.
Oh, yeah. You should have never done quantitative easing infinity in 2013. You better get me off that style. I'll lose it.
I will say this. I recently did some research, academic research on some of what the Federal Reserve is doing right now, Matt. And the current position is not only that they're going to raise interest rates, but they're willing to go back into negative interest rates if they have to. See, part of, I think, why they want to raise rates is so that when the economy does crash again, they can drop them again.
Can I go tinfoil hat for a second? Just 1 second.
Of course you can.
This is what's going to happen, guys, in my opinion. Over the next year and a half, you are going to go through an interest rate environment where you go from 2% to 3.5 to 4%. They have to raise them so they can slash them when they drop. As the market gets killed, and I do believe we will have a massive bear market over the next 2 years, right? It doesn't have to be today. It could be a year from now, but I do believe we're going to go through one, okay? We could be seeing the beginnings of one right now if we look back a year from now. But as the market goes down, the Fed will start slashing rates to zero. When they go to zero, like they did in 09, it's not going to pull the genie out of the bottle like Mark talks about. That's not going to work. You know what's going to happen? They're going to announce quantitative easing 4. That's going to happen. That's not going to work because of how much money they have pumped into the system and how much debt they've pumped into the system over the last 10 years. So they're going to go to a negative interest rate in the next 3 years to stop the bleeding, and that will work. But what do you risk? That's what's going to happen over the next 2 to 3 years. So you might as well just get on board and trade the price action.
All of this is definitely fascinating, and I am willing to go down these rants and talk about interest rate policy as we move forward. That's what the market's focused on. But there's action in the market here today. I do want to look at Matt Gold. As the dollar is dropping, gold is finally getting a bounce. To me, one of the best moves in the market today is gold, and it is breaking out, guys. We've been talking about this.
Signal.
Mark, that falling 50-period moving average was acting as a resistance for a long time, and you can see.
And what happens the more times it's hit? It gets weaker and weaker and weaker. You finally are seeing that, and you're having a double. Much like you did on the Russell, this is not only breaking that resistance barrier of the 50, breaking nice horizontal support too. Huge buy signal.
It's a really good buy signal on gold today.
I love it. I think it's definitely showing us strength here. It's even breaking above that 1220 level that we've been identifying for a long time. You had a trigger at the 50-period moving average. 1190 held, Matt. Support held. You know, more often than not, support does hold. This one held, broke the 50, broke 1220. It's tough to chase it down today as a swing trader, but as you start to position your market posture towards gold,
if you're a position or investing here, there's no tough call there, though.
No, I agree. For a long-term perspective, position trading, investing, swing trader, maybe you wait for an intraday pullback, something, I don't know. You might even wait till tomorrow, you know. But I love what's going on.
Other trading ideas, bull puts underneath the old resistance area for a nice, cheap credit play. You could do bull call spread on the breakout area.
Yeah, bull puts on gold is tough. I like the directional play here. Bull call stock.
Oh, I love the directional short-term play.
Directional play here. Like I said, Tim, you don't really want to chase it at the high if you're not already in. Okay. But you might see a little intraday pullback here, like we talked about yesterday, to have an intraday trigger on the buy side. I just love the signal. I think this is a trend reversal. I think this is a game changer for gold in the short term.
Crude oil.
And mind you, Tim, it's October 11th.
Yep.
Right. What's the date in November? We're launching PG.
Ooh, November 14th.
Right in line. 1 month from now, guys. Right in line. Personal gold coming to tackle trading.
Yeah, we got a new system that we're putting out in November. It's about a month out. We'll be talking much more about that.
We've been talking about trading, but if you were looking, because I remember talking to a couple of people a couple months ago, and they're like, I'm interested in buying some gold, just waiting for the right time. Like, if you're interested in buying gold long-term, like, this is a really good buy signal.
Well, Tyler said something when we launched Bear Market Survival Guide a month ago. Or about 6 weeks ago now. Tyler was doing a Q&A session, and he says, somebody asked him, why now? And Tyler says, well, Matt has a tendency to launch things when he feels the market's ready for him. That was a month ago. We launched Bear Market Survival Guide, and look what happened this month, guys. There's a reason I'm launching PG next month. I think it's time.
I think it's perfect market condition to be learning how to use that slingshot trade to buy metals, Matt. And from a long-term perspective, you've got to hedge off some of the risk of the dollar we talked about. We'll be discussing this a lot over the next month, I'm sure.
Get familiar with this name, guys. Everybody in the halftime crew, get really familiar with this strategy, boomerang.
The boomerang trade. Give me the crude oil chart, Matt. We were waiting for this pullback, and actually crude oil did pull back.
Hey, before you analyze crude, can I just give you some numbers?
Yeah.
EIA came out today, right? EIA was off what, 3.7 million barrels today? Tim, in the last 12 data points, the average miss is 2.85 million barrels on the EIA. When they put out that EIA number, are they just like, why do they force me to even put it? Do they just have some intern that is kind of like, nobody wants to put it out, so they just make up this number?
Maybe we're more critical on them than we should be. It might be within the margin of error. It might just be that they're missing 2 or 3 million barrels every week, but that's over the course of how many million barrels are we talking about in storage?
In a $20 trillion economy, we can get our GDP to the micro fraction data point.
I was trying to be kind to them. They obviously get that one wrong, like literally every week. It doesn't even make any sense. Crude oil failed here at the 20-day moving average, Matt. We're now coming back into old resistance. That 70 mark was actually a resistance point that I thought, we were watching there during the month of August and September as a breakout.
I'm buying any confirmation, just to answer your question.
Yeah. Mini confirmation, intraday confirmation.
At this point, it's any inside candle upward movement in price. I'm buying that.
We have rising inflation, Mark. We have a falling dollar, crude oil pulling back into rising moving averages. Would you wait for a further drop in price? Could you see a trigger tomorrow, or would you wait till next week?
Look at your 20 yesterday. Was tested. Once again, the moving average holding on that first test, as my study says it's prone to do, giving out. This feels like a choppy, volatile market. You know, crude oil went for about 3-4 months there, choppy, sideways.
Mm-hmm.
This feels like sideways price action for a while. I mean, it's a prolonged fake breakout. It just didn't have the stamina. It's just going to be messy, muddy. Probably good for credit spread traders, data traders.
Yeah. Matt, the hurricane that was hitting Florida yesterday was downgraded, I guess, to a tropical storm today. I don't know exactly what the damage was on all of that. I do know many companies, and crude oil, I couldn't understand why crude oil wasn't rallying. It was just one of those days where everything—
It was one of those days everything dropped.
Everything was selling.
Yeah.
And now that storm has kind of subsided, maybe that's to do with some of the price action here today, you know, things back online, stability.
No, it was the EIA number, the massive miss on the supply side on the EIA number. That's what drove this today.
Yeah.
I still like it. I still like the trend. I certainly understand Mark's perspective here. Oil's been kind of hard to hit over the last few months. There's no doubt about that. But
the one thing on those supply numbers, if you go back to several years, because I'm a kind of an oil nut, as long as there aren't a substantial, I mean, if you miss consecutive weeks, fear takes hold. As long as these misses are one-offs, you're going to have sideways action. Huge miss. As an oil trader, not really worried about it, but you miss again, and then you miss again, then all of a sudden fear starts taking hold. I mean, oil can slide with the best of them.
Oh yeah, think 14, right?
Yeah.
107 down to 27 in a year.
Bunch of stocks I want to look at here today, boys, before we wrap up. Square is one of them. Square is one of the worst performing stocks in tech here recently. They had some headlines about the CEO leaving and whatnot. Now coming back towards the 200 period moving average. In the course of about a week and a half, we've gone from 101 down to $70, 30% correction on one of these high flyers, Matt. It's not uncommon. There's a lot of stocks that are taking it on the chin here. I loved this stock for so long because it was
so good to us for a long time.
Is the 200 now something that you would be interested in playing, or does that volatility shake?
I mean, absolutely not. That 200 could be destroyed. Look what it did to the 20 and the 50 day. That 200 day could be literally destroyed in an hour. So I don't see a trade here on Square, to be perfectly honest. Once that trend started slowing momentum here, once it came down, if you remember, Square was one of those Snapchat patterns, right? Remember the Snapchat pattern? Comes right back down into the old support level here, breaks that. No, I don't see a trade here on Square on the buy side.
Yeah, a couple of stocks with bank earnings tomorrow. We do have Citigroup, JP Morgan, a couple others. Give me JP Morgan real quick. Having new headlines in the market could change the conversation a little bit. It could accelerate the sell-off, or it could, alleviate it.
Oh, it's important, JP.
I think this is big, which is why even like today, I know on the S&P, we're hitting the 200 period moving average. I'm not getting long here in the market after yesterday's disruption because I'm still looking at earnings tomorrow. And these financials look ugly, Matt. I mean, they're breaking support.
All of them look ugly.
Yeah. What would you want to see?
A positive report out of JP Morgan could smooth the fear in the market.
For sure. Citigroup, JP Morgan, Wells Fargo, a lot of these.
A negative report could tank the market.
Full disclosure, if the banks come in strong, I'm buying banks. You go to Bank of America. Banks have held support areas. It hasn't been the prettiest thing, but you have a lot of banks at support areas. I mean, you've been in a year-long sideways trend on a lot of these banks. Like a lot of stocks have taken off. The banks haven't done anything this year. Buying as support has been a good play all year long. As long as the reports come in positive, go to Wells Fargo. A lot. I mean, you're just at support areas across the board. If the earnings come in and they're not bad, I'm looking to make some plays on them.
But I mean, I understand it. They're depressed. They got low PE ratios. They've been kind of underperforming the market, and maybe there's a little bit of catch up here. And I'll say this with full disclosure: I hate every bank, so I never buy any banks.
Especially Wall Street banks, right?
Especially Wall Street banks.
Yeah.
I won't short Zion.
I like money.
I hate banks.
That's my.
I'll have to tell you boys a story about having the church come over last night to the house. It was quite a warm moment. Zion made me think about it.
We'll save it for the podcast.
For sure.
I do have a couple stocks I would like to look at very quickly, Tim. Boston Science, we've talked about that in recent history. Had never confirmed here, but setting on that 50-day moving average, good price appreciation, not confirmed yet, but this is one to keep your eye on. Boston's been a good performer for us year to date. Boeing, Tim, we've looked at. I actually like this signal here. Again, hasn't confirmed. You're not going to see confirmation on almost anything today. That's why these trades are tomorrow or the next day, or letting them set up. You do have earnings coming up here to be concerned about, so keep an eye on that as well. But I don't mind Boeing there. PCG, a nice little utility play. Utilities have been doing very, very, very well. PCG, the Pacific Gas and Electric Company, on the tackle 25. Good for covered calls as well on PCG. Very liquid. It's got weekly chart, utility. I don't know what they're doing with their dividend right now, but utilities have been strong this week, Tim. Look at AEE, look at PCG. PCG coming back down into the 20-day moving average today. Look for a little bit of slowing down on PCG. And then the last one on the downside is Tesla. Tesla is, we talked about Mark testing support levels, right? Eventually, Mike Tyson, or Derek Lewis, that guy on MMA from last week, this has been hitting 250 over and over and over again. If 250 fails, Tesla's in trouble.
If 250 fails, 200's in play in really short order. That 250 has been holding it up multiple times this year. I don't trust it at all.
The automakers.
No, I say bet on support always, unless Elon Musk is involved. That is the caveat to it.
Is he high
on support unless Elon Musk is involved?
Elon Musk lost his mind.
I'm looking at the market as we kind of are getting to the end of our halftime report. By the way, if you're halftime crew, like and share, make sure we get the word out here.
And also, if you enjoyed Mark and what Mark brought to the table today,
then buy green tea, fat burner.
Or give us a nice little thumbs up on the YouTube and share it with people. And if you like the halftime report, share it with somebody else out there.
I only pop on the halftime report after 4% drops in the market. So I'll see you in about 9 months.
But we're going to try to bring him on a little bit more than that. And also, if you enjoy Mark's commentary, guys, go check out the Trading Justice Twitter account.
Oh, yeah. If you want my opinion on different things, Trading Justice Twitter, I'm posting there every day. Send me, if you want me to tweet on something or my perspective on anything, send an email to Team at Tackle Trading. Say,
hey, hit you up on Twitter. You need to start learning how to respond on Twitter.
Listen, I am almost 50 years old, and all I give a crap about is looking at stock charts, and then saying witty things. Learning anything else, I just don't care about. So
I like it. I like it.
I'll tell you, as we're wrapping up, though, I do want to give like a quick market update. Go to the NASDAQ, Matt. To me, technology has been the key thing for so long. I'm looking at the NASDAQ here, and it is holding the 200, and it is trying to recover today. And everything we've been talking about all day. But give me a few charts here, Matt, that when you break down the NASDAQ are fascinating to me. Apple Computer, if it closes below 215, guys, I would be very, very cautious on this overall market because it's the only thing that's held up the market. Okay. And Apple has a major support zone. And we are now underneath the 50-period moving average mark. It actually rallied back into that 50 here on the daily.
And the 50 acted as resistance. That is an ugly chart.
That is an ugly chart. And if Apple sells, this market will sell. Period.
I mean, remember, old support, things that prop up, principle, golden principle in technical analysis is they act as new resistance. 50 gives out, acts as new resistance. Plus the horizontal resistance gave out. That's pretty ugly. That's really setting up for a nice bearish play.
I loved Apple.
Hey, Tim, real quick though, 2013, again, historical perspective, 2013, Apple gets cut in half. The market goes up 33%.
That's not the market we're in, though. I don't think.
I agree.
In my estimation,
before we had the FANG, right? That was before we had over leverage in the FANG stocks. Yeah. Thanks. Big shout out to what was the guy?
Thomas?
Not Pete Thomas. Who created FANG?
Jim Cramer.
Yeah, Kramer. Kramer's the one who created FANG, and that was what, 2-3 years ago. So that was before the FANG. And what happened with Kramer and the FANG guys is that's what it obviously led to big gains, and Kramer had a big, and Kramer should be credited on that. But that's one of the drawbacks that's happening with this, is that you had a lot of money coming into those FANG stocks and not in a lot of the other stocks in the market. And now you're seeing that money come out of those FANG stocks, and that's what's kind of driving this market down, no doubt.
Well, technically it's FANG plus Apple, because Apple's not part of the FANG. But.
I think 2 A's. We could respell it. We even added an M there because I think Microsoft.
Well, I think everyone else has respelled it, but Kramer always gets like prickly.
It was Facebook, Amazon,
Netflix, Google.
and Google. That was the original thing. And then others started saying, well, it should be Apple in there. And then some said, it should be Microsoft or whatever.
Well, let's go through the traditional thing, because to me, technology is what I'll be watching here today. Facebook is ugly. It's up today, which is why the market is
50 is vital for Facebook. Keep an eye on that.
Amazon is ugly. Okay. So you break these down and they all look like they're coming back, but that's got room down to the 200 moving average. It still has 100 points down to until you hit the 200, 80 points or whatever it might be. Netflix is sitting
also at support at 1600.
Absolutely. Major long-term support.
Did Amazon hit the $1 trillion mark for, I think, 1 day?
Sure.
Right.
Yeah.
It was 1 day. Wow.
It did not last.
Yeah.
Netflix, we talked about Netflix. Netflix sitting at 325, Matt. You have another 15 points before it even tests support. Now you're on the 200 with Netflix. And that one probably a little bit better, but you got another earnings coming up here. And then Google, our favorite information technology stock in some regards, but that is an ugly chart below the 200.
Okay, take Google, for example, though. Okay, that's what I was talking about. Google double top, breaking of support, kiss of death. That was literally in July, August, and September.
Now look at that. If you want to analyze Apple, look how the 50 acted as that resistance for several days.
Kiss, boom.
Several days acted as resistance, and then just gave out.
Yeah.
The bulls and the bears. This battle that is going on right now, you're probably several days. Now, fortunately for the bulls, they have a nice earnings catalyst that can make everybody forget everything about interest rates. So earnings come in strong. Might take a few weeks.
I'm going to say it every single day until after earnings. Earnings is vital for this market. This earnings season is more important for the market than any earnings season has been since, I want to say, 2015.
And since this is the only time I might get on the halftime show this month, don't forget about not Green Tea Fat Burner, but the November elections.
I want to ask the halftime crew. Let's leave it up to them. Does Mark need to be on here at least once a week?
No,
I think
absolutely not.
Once a week.
This cuts into my trading and tweeting.
I know it does me too. You know how many trades I've missed in my life because I was teaching people how to trade?
Be careful of longer positions. Now, short-term traders, we just adjust towards the whatever the chart is telling us the date.
The populace is saying yes, 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 much needed. Yes, yes, yes.
But for a longer-term position, we're getting about less than 4 weeks out, approximately, of the November elections. So for longer time position traders, start to be. I mean, that's a big event. Dems are probably going to take the House.
They are.
And so
Dems are taking the House. They're not going to take the Senate.
That definitely could be one of those jolts. So,
well,
but also final thought. I never have a final thought because I'm a justice. The final thought is just the first of the next 6 thoughts. But the final thought is, notice how Trump is now like, hey, trade's good. Trump is very aware of market price action.
He's very aware.
Like I started a correlated study that I gave up on because I got sick of listening to Trump. But he is really huge on rhetoric. I actually, for my master's thesis, did a correlation study of Obama and the president. I'm a nerd. I like this stuff. But Trump is very cognizant of the market dropping. Watch him ease up on trade if the market drops.
I guarantee he'll do it. I guarantee.
Like all of this rhetoric of China, all this rhetoric on trade, even today he said, hey, China's starting to come to the table. You think he would have said that if the market was up yesterday? Not a chance.
Listen. Trump is a smart businessman who understands.
He's cognizant. Yes. He will prop up this market if he can, because it's good for him politically. And
he knows one of the only ways that he gets trounced in any general election is if the market does in fact go down. And he was actually in his in the debates and his stump speeches coming into the election cycle, he was calling for a crash in the stock market based on what the Fed has done.
Politics, for all of this hubbub, isn't very complicated. If the economy is doing great 2 years from now, Trump's reelected. I don't care what you think.
You know what? He probably should.
If it's not, he's not. It's that simple.
Yeah, it really is.
And he knows that too. And so watch him prop up the market if it slides.
Right. That's the political thing, right? It's the economy, stupid. That's what it always is.
Yeah. Was it Bill Clinton's campaign manager back in 1992? He's what was his name, Mark?
It's
Raging Cajun.
Yeah,
James Carville.
Carville, yeah. I like Carville. Carville's awesome.
Carville's awesome.
He's awesome.
He's very good. All right, guys. Hey, by the way, we hit a record for the live halftime crew here today, guys. Awesome job.
Halftime crew. Well done.
Welcome. And come on back if you're brand new. Like and share. Make sure that you subscribe to the channel and you click the bell so that you get alerted whenever we do go live here on a daily basis. Mark, great job. Matt.
And there's two things I like. I like tweeting and I like charts. Send an email to team@tackletrading.com.
I'll tell you, I got a little
give me a chart to tweet about.
I got a little nervous when he said, there's two things I like. Tweeting.
Well, there's lots of things.
I didn't know where he was going with that. You want to say we don't have a filter, Tim? Mark has
listen. I had to hold back 75 sexual sayings and about 130,000 swear words on this. So just
thank you for holding back on those.
No, I mean, listen. It's not my fault. I was a professional gambler and I've been in the stock market my whole adult life. Those climates do not produce sensitive souls.
Just say the word, guys, and I'll mute him.
That's an egg and a chicken type thing. Okay. Did that environment create you, or did you create that environment?
First of all, if we give Cody the power to mute Mark,
I will beat the shit out of Cody if he ever mutes me. I will fly down to Honolulu and I will wrap his ass in a leg and barbecue him like a pork pig if he ever mutes me once.
All right, guys.
Hey, guys, I just want you to understand that Thanksgiving dinner is always entertaining at the Justice household.
For sure. The best part of Thanksgiving is the football game in the backyard, by the way. Always has been, in my estimation. And the football afterwards, when you are full and you've got all that.
Football isn't as quality as it used to be. Let's just put it like that.
No, it's not. All right, guys, we are done here for the halftime crew.
I don't know what you're talking about. I'm in shape. I can play because of green tea fat burner.
Thank you, halftime crew. Love you guys. We'll see you tomorrow.
Peace.